First quarter revenue came in at $44.1 billion. The estimate had been for 43.3, so a beat for NVIDIA on revenue.
NVIDIA's earnings are a litmus test for the entire AI economy. They're guiding to $43 billion in revenue this quarter. That's up 65% year over year.
The biggest one, of course, is the reasoning AI inference.
Hey everyone, and welcome back to Janice Talks. If you follow the markets, you've heard the noise. NVIDIA, they did it again. The headlines are screaming. A mind-blowing $44.1 billion in revenue. Billion! That's a number so big it's hard to wrap your head around. Everyone saw NVIDIA's massive revenue, but did you see the real profit hidden by a $15 billion China hit? Or their gaming division's record quarter? Stick around and I will tell you about the 5 key takeaways from the earnings report. The stock is hitting new highs. The AI revolution seems unstoppable, and CEO Jensen Huang is on stage talking about thinking machines being in full production. It feels like NVIDIA can do no wrong, but let me ask you this. If you only read those headlines, if you only looked at that giant revenue number, are you getting the full picture? I don't think so. Because beneath the surface of these blockbuster numbers are hidden challenges, surprising strengths, and crucial clues about where NVIDIA is heading next. Clues that, frankly, most analysts and a lot of investors completely missed. Today, we're putting on our detective hats. We're digging deep. We're going beyond the hype and beyond the headlines to uncover the 5 critical details from NVIDIA's latest earnings report that you need to know if you're serious about understanding this company and the future of tech. And because you guys are the best viewers out there, for those of you who stick with me till the end, I've got a bonus 6th point. A point so forward-looking, it might just redefine how you see the future of technology itself. Trust me, you won't want to miss this. Ready? Let's dive in. All right, let's start with something that might have caught your eye if you looked past the revenue, the gross margin. Now, for those new to investing, gross margin is a really important number. Think of it like this. For every dollar of stuff NVIDIA sells, how much is left over before paying for things like research, marketing, and taxes? It tells you how profitable their core products are. And NVIDIA's GAAP gross margin, that's the generally accepted accounting principles version, the official one, took a hit. It came in at 60.5%. Seeing that drop, you might think, uh-oh, is NVIDIA losing its pricing power? Is competition heating up? That looks like a crack in the armor, right? But hold on, because there's a huge but here. And it comes down to geopolitics and a specific chip, the H20. You see, the US government implemented new rules requiring a special license to export high-end AI chips like the H20 to China. This H20 chip was specifically designed for the Chinese market, a workaround for previous restrictions. But the new rules hit these too, and the impact wasn't small. Because the demand from China for these specific chips effectively vanished overnight due to these new license requirements, NVIDIA was left holding the bag. How big? NVIDIA had to take a massive $4.5 billion charge. This is basically them saying, we have all this inventory we made for China, we can't sell it there now, so we have to write down its value. That's a huge one-time hit. But here's what many people missed and what NVIDIA wants you to understand. They also report non-GAAP numbers. Think of non-GAAP as the if this weird one-off thing didn't happen version. And if you exclude that $4.5 billion inventory charge, guess what? the non-GAAP gross margin would have been 71.3%. That's incredibly strong. It shows the core business, the actual profitability of selling their chips outside of this one-time hit, is better than the headline number suggests. And they're confident too. They're guiding for 72% non-GAAP gross margin next quarter and are still aiming for the mid-70s range in the long run. So, the big takeaway here? Don't let that $4.5 billion H20 charge fool you. It's a real hit, yes, but it masks the underlying strength. NVIDIA's profit engine is still firing on all cylinders, despite the significant China challenge. But that challenge, well, it's even bigger than you think. We just talked about that $4.5 billion inventory charge. That's a big number, but it's only one piece of the H20 puzzle. The real story, the true financial impact of these China export controls, is frankly staggering when you add it all up. It shows just how much NVIDIA is having to navigate. Before these latest rules hit, NVIDIA was doing massive business in China, even with earlier restrictions. They were on track to sell around $4.6 billion worth of these H20 type chips in Q1 alone. But because the new rules kicked in, they couldn't ship a significant chunk of that. How much? In their earnings call, they specified that they were prevented from shipping an additional $2.5 billion in Q1 that they would have otherwise sold. So add that $2.5 billion to the $4.5 billion charge, we're already at $7 billion. But wait, there's more. And this is a part that really puts it in perspective. Looking ahead to Q2, the quarter we're heading into now, NVIDIA explicitly stated in their guidance that their outlook reflects a further $8 billion hit in H20 related revenue. They are essentially saying, expect $8 billion less revenue next quarter than you would have purely because of these China restrictions. Let's do that math. $4.5 billion charge, $2.5 billion lost in Q1, $8 billion expected loss in Q2. That adds up to $15 billion. $15 billion. That's the minimum financial hit NVIDIA is absorbing in just 2 quarters because of these export controls. This isn't just a minor setback. It's a massive geopolitical and financial challenge. Understanding this $15 billion figure puts the China problem into a whole new, much starker perspective. And honestly, it makes their overall $44.1 billion revenue number even more impressive, doesn't it? Okay, enough geopolitics for a moment. With everyone, and I mean everyone, mesmerized by the giant numbers coming out of NVIDIA's data center business, it was incredibly easy to miss this. NVIDIA's gaming division just had an absolutely monster quarter. We're talking a record $3.8 billion in revenue. Let that sink in. That's up 48% from the last quarter and up 42% from the same time last year. Gaming isn't just chugging along in the background. It's hitting brand new highs. It's a powerhouse in its own right. They just launched their brand new RTX 50 series cards. Think the 5080 and 5090, and early reports are fantastic. And they're pushing DLSS 4. That's their AI-powered graphics tech that makes games look better and run faster. It's like magic for your games. But here's the stealth bomber, the secret weapon that many people haven't fully priced in yet. In the earnings call, and confirmed in recent leaks and reports, NVIDIA is officially powering the Nintendo Switch 2. And crucially, the new Switch will feature NVIDIA's AI-powered DLSS technology, likely aiming for upscaled 4K gaming, even on a handheld. Think about this. The original Switch sold boatloads. We're talking one of the best-selling consoles of all time. The potential install base for the Switch 2 is enormous. This isn't just about selling a few more chips. This is a massive multi-year win for NVIDIA. It puts their cutting-edge AI technology, DLSS, into the hands of millions upon millions of mainstream console gamers. It's a huge validation and a long-term revenue stream. So while the data center rightly gets the headlines and pays the biggest bills, don't sleep on gaming. It's a powerful, growing, and perhaps underestimated force in NVIDIA's arsenal. And that Nintendo deal? That's a blue shell of a win for NVIDIA. You've probably heard Jensen Huang use the term AI factories a lot recently. It sounds like a cool buzzword, right? But it's so much more than that. It's a core part of NVIDIA's global strategy, and it's unfolding right before our eyes. NVIDIA isn't just content selling shovels or GPUs in the AI gold rush. They are actively co-building the mines themselves. They are partnering up to create the world's AI infrastructure. And if you listen closely to the Q1 report and recent announcements, they drop some specific names and locations. Did you catch them? They're partnering with Humanoid to build dedicated AI factories in Saudi Arabia. They're working with G42 and also collaborating with giants like OpenAI and Oracle on a project called Stargate UAE in Abu Dhabi. Think a massive AI cluster. They're teaming up with Foxconn, yes, the company that builds iPhones, and the Taiwanese government on another AI factory supercomputer in Taiwan. And of course, they're building out similar AI factories right here in the US. This isn't random. It's a deliberate, strategic push. What it shows is that countries all around the world, from the Middle East to Asia to North America, now recognize AI capability as essential infrastructure. It's like electricity or the internet was in previous generation. And NVIDIA is strategically positioning itself today as the central architect, the key partner, the indispensable player in this global build-out. They aren't just selling to companies, they are embedding themselves directly into national AI strategies. That's a powerful place to be. Okay, we all know NVIDIA makes incredible hardware. The H100, the Grace Hopper, and now the absolute beast that is the Blackwell chip. It's easy to think NVIDIA is just a chip company, but if you only focus on the hardware, you're missing what might be NVIDIA's real long-term strength. Its hidden competitive edge. It's Moat. And that moat is built on software, platforms, and ecosystems. NVIDIA isn't just selling silicon. They're building the entire stack on top of it. In Q1, they highlighted several key moves. They launched the Llama Nematron family of models. These are open models, meaning they are giving developers powerful tools to build AI agents and applications. They introduced the AI data platform and DGX Cloud Lepton, essentially creating an easy on-ramp for developers and businesses to connect directly to NVIDIA's powerful computing infrastructure. And crucially, look who's jumping on board. Major industrial players like Accenture, SAP, and Siemens are integrating NVIDIA Omniverse. Omniverse isn't just about making cool graphics. It's about building digital twins, virtual replicas of real-world factories, products, and even cities. It's the platform for the next wave of industrial digitalization. These companies are building their future on top of NVIDIA's platform. Why is this a moat? Because NVIDIA is building a sticky ecosystem. Once developers learn CUDA, NVIDIA's programming language for its GPUs, once enterprises build their workflows in digital twins on Omniverse, once they rely on NVIDIA's AI enterprise software, it becomes very, very difficult and expensive to switch to a competitor. This software layer, this ecosystem, is an incredibly powerful and often overlooked competitive advantage. It locks customers in and keeps rivals out. The hardware is amazing, but the software might be the key to their long-term dominance. Okay, deep breaths, everyone. Those were the 5 big things you might have missed. From navigating $15 billion China headwinds while still posting incredible underlying profit strength, to a record-breaking gaming comeback, a truly global AI factory build-out, and a deep, deep software moat, NVIDIA's Q1 was absolutely packed with details that go way beyond the headlines. But I promised you one more, a bonus point. This next thing that wasn't splashed all over the news, but might just be the most important clue about where NVIDIA believes the entire world is going. This last one isn't just about the last quarter or even necessarily next year. It's about a vision. It's a clue hidden away in their automotive section, a section most people skim over. But its implications go far, far beyond just cars. You've stuck with me this long. You definitely want to hear this. Stick around. Here it is, the bonus point, the one that, when I saw it, made me sit up and say, whoa. Buried within their automotive and robotics update, which, by the way, saw impressive 72% year-over-year growth itself, NVIDIA announced something truly extraordinary. Isaac GROOT, N1 and N1.5. And listen to how they described it. The world's first open humanoid robot foundation model. Let that sink in for a moment. A foundation model. Just like GPT-4 is a foundation model for language, NVIDIA is building the foundational AI model, the brain, for general-purpose humanoid robots. They aren't just making the chips to power these future robots. They are building the core intelligence that will allow them to learn, adapt, and operate in the real world. They're creating the tools, like Isaac Lab, for generating synthetic motion data, basically training these robots in virtual worlds before they even set foot in a real one. They're positioning their most powerful systems, like Blackwell, as the engine for accelerating this development. And they even mentioned they're already working with partners like General Motors, using their platforms to design next-generation factories and integrate robots. Why is this the crucial missed point? Because while everyone is focused on large language models and AI in the digital world, NVIDIA is placing a massive long-term bet on physical AI. The potential market for humanoid robots in manufacturing, logistics, healthcare, maybe even our homes, is a market that could potentially dwarf everything we've seen so far. It's the AI revolution stepping out of the screen and into our physical world. And NVIDIA is positioning itself today, right now, in Q1 2026 to be the central nervous system, the operating system, the brain for that entire future. It's incredibly ambitious. It's definitely long-term, and it shows that NVIDIA's vision extends far, far beyond just the data center. It's a glimpse into a future they plan to power. So there you have it. NVIDIA's Q1 fiscal year 2026. It wasn't just a simple story of $44.1 billion. It was a complex narrative of navigating a staggering $15 billion China headwind while proving their underlying profitability is stronger than ever. It was a surprising resurgence of gaming, boosted by a game-changing Nintendo deal. It was the strategic construction of a global AI infrastructure network. It was the quiet strengthening of a powerful software moat. And looking to the horizon, it was the bold, ambitious bet on becoming the intelligence behind the coming age of humanoid robots. It's a lot to take in, but understanding these details gives you a much richer, more nuanced view of NVIDIA today and tomorrow. But what do you think? What was the most surprising or missed detail for you from NVIDIA's earnings? Did I miss anything you thought was important? Let me know down in the comments below. You know I love reading them, and I read every single one. If you found this deep dive valuable and it helped you understand NVIDIA a little better, do me a huge favor and smash that like button. It really, really helps the channel grow and tells YouTube you want more content like this. And if you haven't already, make sure you subscribe and ring that notification bell so you don't miss the next video where we break down the complex world of finance and markets. Thanks so much for watching, everyone. This is Janice signing off.